The world of Snarf.
Alright guys, it's time for another portfolio update. It has been a little over a week now, and what a week it has been. So those that have been keeping up with the market will know that it totally tanked this past week. Today, especially, the Fed announced that they are raising the interest rate by 0.25%, and that totally hurt my REITs and other real estate investments, which, guess what? Most of my dividend portfolio is in REITs, so that totally sucked. But, I will keep you guys updated and informed with my portfolios nonetheless, even when they look a little bit down. So let's dig into Acorns first. So I am under $1,000 in value again. So you know that I recently changed my recurring investments. So no longer doing the $5 a day. It is now just $10 a week. So if we actually dig into this, let me see. You'll see something a little bit depressing, so to speak. Let's go into the performance. So I will go to the last month. So for a while here, when I was still doing the $5 a day, you would see a linear upward trend. Now I'm only doing $10 a week with roundups. You will actually see that I am now not even beating the amount that I'm losing. So typically, the $5 I'd pump in every day, plus the value I was losing when the market was down, I was still trending upward. So now even with pumping money in and the market trending down, you can see my value is decreasing a lot. If we look at the 3-month, you can sort of see where this upward trend just sort of halts right here and sort of levels out and actually leans towards going down. So that was no fun. If we look at today, I had about a little over $1 worth of dividends drop in. So we're a little bit high here. The day was going great. We were up like $10. And then the Fed announced, okay, interest rates going up by 0.25%. Right there's where we lost everything. So it's about a $30 difference by the end of the day from up here to down here. So that totally sucked. But it is what it is. I'm going to stay the path, keep investing my $10 a week, plus my double roundups. You will see here, dividend was paid out. Real estate, yay! So the REITs that were hit especially hard, this one actually paid today. So congratulations, Acorn is automatically reinvesting your dividends for you. It was $1.19. If we want, we can actually see how much I own of that REIT. Let's go into my portfolio, real estate stock. So how much of this do I actually have? Quantity. So 1.27 shares of VNQ. So 1.27 shares paid out a dividend of $1.19 to me. So pretty interesting. But enough of Acorns because we are moving on to more treacherous and bigger losses here. So my dividend digest portfolio. So it was hit as well. So let's just look at the past week. I was down almost $100 this past week, which is almost 6%. So let's take a look at some of my holdings. We have Gladstone, which is good. We have Guggenheim, GOF, Capital Southwest, Inviva, Apple Hospitality REIT, and then we have another Gladstone in gain. So look at all these nice losses because a lot of these deal with real estate investments. And like I said, they've been hit pretty hard over the last week with the talks of the Fed raising interest rates, and with today they finally did execute it. So let's just look at today. Oh yes, hello dogs. They came to cheer me up after all this sad day in the market. So you can see good is my largest holding for today. Is down 0.3, Guggenheim down 0.27. Capital Southwest is sort of this oddity that always tends to do well when the others don't, so they have a little bit different holdings. It is a quarterly dividend payer, so they always tend to do a little bit better. But let's just look at the whole thing here. Down 14%. So let's see what the true value is down 6.58%. Yeah, so, this will recover. Dividends are going to eat into this loss. We're going to get used to that whole interest rate that went up. So, not too worried about it, but you can see, people do get hit hard. So, if your portfolio is suffering right now, just know you're not the only one, especially those of us that had a heavy real estate portfolio. And last but not least, my Fidelity Go account. So it is now at a value of $7,345.86. If we go over the timeline, we will see that we are down $229.14 from being at the break-even point. So even with dividends falling in and cap gains and all that fun stuff, we are still down. I'm considering the amount that is invested in here, and my other portfolio is losing about 3% each day when the market's down. This is not a lot. So this one has been relatively safe just because it's so diversified in bonds as well. Bonds don't get hit as heavily. So that's the portfolio update thus far before we head into the holiday week. So that'll be interesting as well. I'll be excited to report on how my portfolios do that week. So if you guys' portfolios were suffering this week, hopefully this video gives you a little bit of peace of mind. That way you're not the only one who's hurting. I'm hurting, but I'm not going to change any of my investment strategies at this point. I'm just going to keep chugging on through like we have been doing. So, buy while the stocks are down and see if you get a good return on it. But as always, guys, go ahead and comment, like, subscribe. It really helps me out. Let me know what kind of videos you'd like to see, what you want to see in future videos, and I will keep the content coming. Thanks.